If you have a self-directed IRA, then you know that you can use it to invest in real estate, but unfortunately, using it to flip houses may be subject to what's called Unrelated Business Income Tax, or UBIT for short, which would wipe out any benefits. But the thing is, the UBIT tax rule is vague as to when it applies, so you need to understand the implications, which I'll explain on this video. But that's not all. I'm also going to show you a little known black hat technique that would allow you to still flip using your IRA and avoid the UBIT tax. All that and more coming up.
This video is brought to you by Flipster, the nation's #1 real estate software, with tools for finding, funding, and flipping houses. Check it out now at getflipster.com.
If you're new here, I'm Jerry Norton. I make millions of dollars a year wholesaling and flipping houses, and here on my YouTube channel, I show you how to do the same. So if you want to be a flipping genius like me and live your dream life, subscribe to my channel and watch my video. To start, if you have an IRA, self-directing it allows you to have checkbook control and decide how the funds are invested. After all, it is your money. If you don't have an IRA, I strongly recommend you open one, self-direct it, and begin making contributions, even if they're meager to start. It's less about the amount and more about the mindset and the practice of building long-term wealth by taking advantage of the tax benefits. Create good habits with money now, even if you don't have very much, so that later when you do, you'll have the knowledge and the discipline to manage it wisely. There are several different retirement plans. I have a solo 401k, that's the best vehicle for me, but I'm not a tax professional, so make sure to consult with a competent tax advisor regarding current rules and laws, as well as what's best for you given your individual situation and goals. For simplicity, I'm going to refer to all retirement plans as IRAs. On this video, I'm not going to talk about the different IRAs or the rules and requirements, but I did put together a cheat sheet that breaks down everything you need to know about flipping houses with an IRA. Best of all, I'll give it to you for free. The download link in the description box below this video. Since an IRA is a tax-exempt entity, the IRS requires your investments are passive in nature. In real estate, holding rental properties or private money lending qualify as passive investments. Wholesaling or flipping is considered an active investing practice in a trade or business. The problem the IRS has is if you use your IRA to flip houses, is your tax-exempt entity is now competing with tax-paying businesses, and that's not fair. So to level the playing field, the IRS instituted a tax known as Unrelated Business Income Tax, or UBIT for short. Now, the UBIT tax is meant to prevent tax-exempt entities, such as your IRA, from driving tax-paying entities out of business. How significant is the UBIT tax, you're wondering? Well, as of 2021, if you make over $12,500 on your investment, the tax is 37%. I'd say that pretty much eliminates any benefits gained by using your IRA. So I get it, the UBIT tax makes sense, but before you completely dismiss flipping with your IRA, not so fast. Whether or not flipping with your IRA triggers the UBIT tax is not so cut and dry. The rule is vague and subject to interpretation. Let's take a closer look. The IRS states that the UBIT tax applies when tax-exempt entities, aka your IRA, engages in a trade or business on a regular or repeated basis. Well, what constitutes regular or repeated? Good question. The language in the tax code does not explicitly say how many flips constitutes regular or repeated. And unfortunately for you, the IRS gets to decide and not you. As you can imagine, this is a much debated topic in the real estate IRA and tax community. And you'll find a range of opinions regarding the number of transactions at which the UBIT tax would apply. Some argue more than one, some argue less than 5. Ultimately, like I said, the application of the UBIT tax is at the sole discretion of the IRS. Here's the short end of it. The tax code allows the IRS to consider the specifics of each individual case and to make a determination regarding whether the investment activity taking place is subject to UBIT. Not very helpful for you to decide, but in general, aside from looking at the number of flips in a year, the IRS will also examine if the activities and the engagement and scope of involvement on your part constitutes a business activity instead of a passive investment. Again, consult with a licensed tax advisor before deciding to use your IRA to flip houses. Now, if you do decide to use your IRA, remember the IRS wants your IRA to be involved in passive investments, so make sure you are not actively involved in the flipping process. This is referred to as arm's length, which means you need to avoid being hands-on or directly involved in the project, such as buying materials, acting as contractor, and for sure not doing the work yourself. You have to manage the project from a distance, which is how I teach how to flip houses anyways. Now, I do most of my deals remotely without ever seeing the houses in person. To learn how to do your first or next deal remotely in the next 30 days, be sure to get my free guide that will show you step by step how to do that. Just go to virtualflipperkit.com to download that for free. Okay, I'm glad you made it this far. Let me share with you a super cool ninja strategy that would allow you to still flip properties using your IRA while avoiding UBIT tax. Here's how. Buy a discounted property and renovate it using your IRA like you normally would, but instead of reselling it quickly, which may be considered a trade or business and thus trigger UBIT tax, hold the property as a rental for at least a year. Then after renting it for a year, go ahead and sell it and realize a big profit tax-free or tax-deferred. Now, when the property is sold later in the future, it's not viewed as a flip and is therefore not subject to UBIT tax. Now, I have 2 houses right now where I'm doing this technique. I bought and renovated the properties. I put tenants in on 1-year leases. Those leases are now coming due in a few months, and I just instructed property management to tell the tenants I will not be renewing the leases, and if the tenants leave on time with the property broom swept clean, I will give them each a $1,000 bonus. Now, following this technique, not only will my IRA capture all of the cash flow, but also the equity gain from the market getting double-digit appreciation, all tax-free inside my IRA. Now, if you think that's brilliant, leave a comment and say, Jerry, that IRA flipping technique is super cool. You are a flipping genius. And like I said, I put together a cheat sheet which gives you a breakdown of everything you need to know to flip houses with your IRA. And I'll give that to you for free, link in the description below. And in case you're wondering, I make millions of dollars a year flipping houses and pretty much don't pay any income tax. It's a little known IRS tax code called Act 60. Watch this next video to find out all the details. And if you haven't yet, be sure to subscribe to my channel with over 800 videos. This is the #1 channel on YouTube for all things flipping, and I'll see you on the next video.